we head into the second quarter, to give us his economic outlook for the rest of the year is Robert Johnson. He is the Director of Economic Analysis at Morningstar. Hi, Bob.
Great to be here today.
Thank you so much for joining us. Your forecast for the economy is lower than many other economists are expecting. The first quarter has its seasonal challenges, so you can always blame it on the weather. But what's got you down for the rest of the year?
Sure. Obviously, there is going to be an issue in the first quarter, and everybody is now thinking growth will be more like 1% or less in the first quarter here because of those weather effects that you cite. But there's some other underlying issues, too, that I think will depress the growth rate and keep it in kind of a 2 to 2.5% range. I think the biggest one of those is that the low energy prices are a two-edged sword. We've got the positive effects for the consumer, which I'm sure we will see. On the other hand, you're going to have less capital spending for businesses. You're going to have less oil production by the end of the year. You've got less oil field equipment. And you've got even the consumers scared in like Texas and Pennsylvania and North Dakota, where we've been in kind of an oil and gas boom.
And consumers do drive the chunk of this economy, and you expect higher incomes and employment rates could push consumption slightly higher. But as you mentioned, the lower gas prices, more and more stats we're getting show that Americans are saving more and spending less, especially with them pocketing from lower oil prices. What's behind this shift, and do you see a cultural change in this country to become a nation of more fiscally conservative people?
I think the effects are temporary. I think that the consumer has been not able to, in many parts of the country, get to the stores, and we've kind of become weather wimps, if you will. And it seems like when we get bad weather, people really do slow their shopping patterns, and we'd expect that to pick up a little bit. We've seen other bouts of when consumers kind of cut back a little bit, and it usually doesn't last very long. So no, I'm not in the camp that we're now a nation of savers. That's absolutely doesn't have a lot of merit, in my opinion. I think that we've had high utility bills as well. The price of oil and gas has been cheap, but the quantity needed has gone up because of the cold weather, and I think that's people have missed that a little bit in the numbers too.
Interesting. But as it stands, the U.S. is the strongest economy on the planet, at least as of now. Many businesses, including Apple, find expanding in China extremely necessary. Double-digit growth from there can no longer be expected, but will China still grow enough to keep up with corporate expectations?
Absolutely. I mean, I think that overseas profits are important to U.S. businesses, and unfortunately, with the strong dollar, that is going to weigh on corporate earnings in the next few quarters. We're already hearing first quarter, a lot of people are projecting, gee, maybe we won't quite make our numbers, but it's all currency. So there is a big impact from currency. In the first quarter, we're up almost 10%.
Bob, thank you so much for sharing your insight with us today and your forecast for the rest of the year. Robert Johnson is the Director of Economic Analysis at Morningstar, and I'm Susanna Lee for The Street.